Start. So Calvert Home Mortgage specializes in assisting borrowers with flip financing. We really love to partner with flippers in helping them succeed on their projects. We've been working with flippers for over 30 years now, and we've learned a lot through various markets, various flip strategies, and even various flippers. Our goal is to be able to offer an effortless experience with the hopes of helping the financial success of all stakeholders. The financial success for this audience is obviously our flippers, and we do our best to pass along our expertise to our flippers. I see a few people in the audience here have worked with us, and I'm hoping that they believe that to be the case. We like to take the opportunity to educate our borrowers where possible, just in an effort to see them be as successful as possible. So today, what we'll be talking about is what makes a flip successful. We'll be hitting on buying right. And that's where DCI really comes into play, because what we believe is the biggest success factor in a flip is buying right. Regardless of how awesome our flippers are at their renovations, regardless at how great their purchasing power is, or where they're buying materials, it's all about buying the right property at the right price. That's where you're going to build your profitability. Tools like utilizing a wholesaler and other tools on identifying and buying right are key. Renovating for the market. We'll discuss ideas along the lines of what does the market command for renovations. We never like to see our flippers over renovating. The flipper group is very passionate about what they do. And they're very, what I love about them is that passion translates into some really quality work. Unfortunately, sometimes they go above and beyond for what the market will demand, and that will limit their profitability. Sticking to a budget, again, identifying a scope and a price point is key in executing your budget, and in executing a budget that you could stick to and sticking to it. Of course, from time to time, we'll enter into projects where, some unknown variables come to light and you have to go a little bit off scope or off budget. That's fine, but, it's really important to really hone your scope in, hone your budget in, and execute. The best flippers are those that understand exactly what they're about to do, understand all variables, and execute on their budget. That goes right into quick renovations. The less time you take to renovate, typically the more profitable you'll be, especially when borrowing at private rates. The longer you hold the property, the more that those variable costs related to your flip are going to eat up profitability. Also, in a market like Calgary is where price points are moving. Right now we've been fortunate where they've been stable and even a little bit up on the mid to lower half of the market. But over the last 4 years, it's been mostly a downward direction. And when the market's going down, it's even more important to renovate quick, because you want to be able to put your product back on market in and around the same price that you had anticipated to when you first did your after repaired value. The longer you wait, the more likely the market will move on you. Understanding rental costs is huge. Some flippers will rely on third-party tradespeople and rely on a project manager for their rental costs, which is fine. But it is important to be able to have the tools to audit those costs, understand what those costs are, because if you don't, those costs can get away from you quickly. And again, decreasing your end profitability. And then finally, knowing your numbers, understanding all costs associated with the flip. Calvert has a great tool, which we refer to as our flip analyzer, which will help you go through all your numbers and consider each one. And we'll go over these some of these numbers. So in terms of today's topics for discussion, we're going to talk about neighborhoods. We're going to talk about valuation techniques. Again, making money on the buy, which we believe is the most critical component of your profitability in any market. And we're really happy again to have DCI on to talk about how they go about providing value on that end, which is the most critical end. Quick reno, knowing your numbers, understanding rental costs, sourcing deals, and acting fast. So we'll start with neighborhood. It's critical to do your research. We always talk about creating a great team around you with realtor, mortgage brokers, tradespeople, wholesalers, project managers. Creating that team is critical to your success, and that team will fluctuate as your business evolves and matures. But regardless, you need to take, in order to be truly successful, you need to take ownership of the process. So when we talk about doing your research, there's a lot of great information out there through whether it be MLS, through various data portals that enable you to understand what markets are doing. And we're not talking just the broad market here. We're more focused on Calgary, but what the neighborhood market is doing. Is there a lot of inventory? What are average sales numbers? What are average days on market? What is the community ceiling for sales? When you're analyzing a property to purchase, we're always looking at what the after repair value is. What type of renovations are you going to do to hit the neighborhood standard? We always recommend doing more vanilla projects. You don't want to put a property, or you want to avoid renovating a property where you're an outlier, or where you're an edge case for the neighborhood, because that's going to make it harder for you to understand what the after repair value is. That's going to limit your potential buying market. You want to just focus on creating a great product for the neighborhood. Being aware of inventories in the area. Again, Calgary is right now facing one of its softest markets as it relates to the amount of supply versus demand, and that has downward pressure on prices. Although not all neighborhoods are equal. Some neighborhoods have a 1-2 month supply where you look at sales versus inventory. Some neighborhoods have 8, 9, 10 month supply. You want to know your numbers in order to key in on which neighborhood you want to be participating in. The lower the supply, the more likely you are to sell quickly, and the more likely you are to sell at your number. And the easier it is for you to figure out what your after repaired value is. And really being aware of recent sales, active sales, and expired sales. One big pitfall that we see flippers do is they consider listings as a comparable, and that's not. Your sales are your comparable, and the more recent, the better. The more recent and the more closely related to your property, the better. So, let's say, for instance, you're dealing with your typical 1,100 square foot bungalow, and you're trying to compare it to, a 2,000 square foot 2-story. Well, you're comparing apples to oranges, and that's going to be a big pitfall. If you're comparing it to another 11, 12,000 square foot bungalow, you're going to have a lot better feel for what it's going to sell for. But really, really stay away from the desire to try to compare it to active listings, because from our perspective, it's not a comparable until it sells. You can list your house for whatever number you want. That doesn't mean the market's going to do anything with it. And in a softer market like we're dealing in, if you're listed too high, it's not even going to hit the radar a lot of potential buyers.
Can I ask a question on that?
Yeah, absolutely.
So when Jason and I are looking at comps and looking at deals that we're coming across, we often factor in same street sales versus just comps in the area. So where there may not have been something that sold on that street for say 3 to 5 months, usually in the same types of areas, you're going to get the same builder, the same style, the same square footage, the same layout. So we will look at what has sold in comps, but we will also kind of take into consideration what is sold on that street.
Yeah, awesome comment. The more similar the comparable, the better. But sometimes you do have to reach out and kind of look at a street over, or even a neighborhood over. And again, that goes back to doing your research, knowing that a Willow Park is somewhat similar to a Bonavista, although you'll have to discount it a bit. But a Willow Park, although it's very close to Acadia, not as close, and you'll have to adjust downward. So absolutely, you're not always going to get perfect comparables, especially in a slower market like Calgary's in, right? There's just less sales and in turn less data for you to deal with. So you're going to really have to put in that time to be that expert and do your research. Some people that can provide value on research are your wholesalers, are your realtors. There are a lot of great information just on the internet, but doing your research and becoming that expert is key. Making sure you are aware of the history of the property. It's very easy just to throw the property address in Google. And a lot of times, if there was a material event that occurred at the property, such as it's been a drug house or the site of a murder or other violent crime, or grow up, that is a lot of that information is just going to show up on a Google search. So it takes really 5 minutes to review a couple pages of Google, and usually all the information is going to come up on that first page, and then diving into the information and understanding, is there a stigma associated with the property? A lot of times properties listed or that are being presented to you below market value, they may have a stigma. So you're going to want to do your research and pay attention to that. Choose a realtor or partner who understands the marketability of the property. If there has been a stigma associated with it, that doesn't mean that there's not an opportunity there. That just means that it's a different opportunity. And you're gonna have a bit of a headwind when selling. There's going to be more objections. It may be harder for the potential buyer to get financing. We've worked with a few flippers that have sold grow-ups, remediated grow-ups. But because of that, the amount of conventional lenders, so your tier one banks, are limited in terms of who wants to fund those properties. So in turn, the buyer's option for financing is going to be limited, and you're shrinking your market. So if you do choose to take on that task, really understand it intimately, and it's difficult to understand intimately. So unless you're a really seasoned flipper, we would recommend staying away from it. If you're new to flipping, and haven't really done it much, it's going to be more difficult to understand the nuances associated with working with a property that has a stigma against it. I also was remiss to talk about expired listings. Look at expired listings. They can tell you a lot of information, especially when you're looking at renovated properties, right? A lot when people price it too high, they'll sit on the market for a while, then they'll come off the market and go on as expired. So take a look at those, understand why they didn't sell, why they failed. A lot of times it is related to pricing, but also it could be related to the renovations for the market. You know, they could be over renovated. They could be trying to list a really nice property for 600 grand, but that would be way outside of what that market commands. You know, that it might be a $500,000 market, and yeah, in terms of a cost approach, the property's worth that all day, but the market just doesn't see the value in it. So for valuation techniques, again, we cannot emphasize enough that you make money on the buy. So stick to the numbers. Don't manipulate the numbers. Numbers do not lie. Run through and let the numbers speak for themselves. Going back to a new flipper versus a seasoned flipper, a new flipper will get passionate about the opportunity and try to make the numbers work regardless. They will, or sorry, I shouldn't say they will. They're more likely to get emotionally involved rather than just involved from the business perspective of it. Seasoned flippers will just, it's a pure numbers game. If the numbers don't work, they're immediately moving on to the next opportunity. They're immediately analyzing the next opportunity. It's sometimes easy and tempting to use comparables that are on the higher end. You know, you can, it's not impossible to manipulate the numbers. So, you know, choosing, if there's 6 good comparables, you may choose the three highest that will make your number look highest. Whereas, you know, a more seasoned and savvy flipper will look at their worst case scenario. They'll use, you know, the 3 most conservative values and say, here is what my likely end value is. And based on that, run their profitability scenarios, run their viability scenarios, not try to push up the value for the sake of making it work. We want to see our flippers succeed in every deal. So we're usually a little bit, we like to really consult with our flippers on this, because too often we see people trying to push the numbers to make them work, and in turn failing. The last thing we want to see is you guys to get into a deal and make, you know, $5,000 for all this risk you're taking, or even worse, lose 5,000 or lose 10,000 because of all this work, because of the fact that you're just manipulating numbers to suit the story you want it to tell versus to suit reality. Try not to base your value on active sales. Again, that's a big pitfall. Or sorry, on active listings, that's a big pitfall. Use sales. Also, as Ryan said, you know, try your best to use sales as similar to the subject as possible. If it's a bungalow, do bungalow. Try to keep it within 10 or 15% of the square footage. Try to use similar properties. Don't use a crazy renovation when you're doing, don't use a crazy high-end renovated as complete value if you're doing average, and vice versa. And try not to use sales that are too old. Again, tricky right now in Calgary because there is not the pace of sales that we're used to. But you should still be able to find sales within 6 months. And if you can't, that may be telling you something too. If the product you envision putting on the market hasn't transacted in 6 months, that should tell you, ooh, you know, I better think twice about this opportunity.
Jesse, can I jump in and add on that? We've lost some money on flips. So we've done well on some and we've lost money on some. And I think you always learn more from the ones you lose on. And so for us, we realized anytime we were going outside of like our urban cities that we were sticking to, and we were going a little bit more in the outskirts, it does get trickier to comp. It does get trickier to price. You could be matching it against stuff that's new build, and you're looking at stuff going for say 5, and you picked it up for 350, and you're like, yeah, I can put 50 grand in here and maybe reach that, but those new builds are going to be worth way more. And the other thing, when you are looking in sort of more rural areas, I didn't take into account some of the just extra costs that come in for, something like, we had a fly infestation. I was like, you're never going to see that in the city, but we had it there and weren't really expecting it. But just shit like that we had to move a well that we weren't really expecting to do. So I think we've learned more from the losses than we have from the wins. Just making sure, if you are kind of doing stuff in rural areas, you really got to be conservative on your numbers.
Good point. And I think it's more anytime you push the edges on what is normal, right? That's when you got to be worried, if whether it's rural property or dealing with a remediated grow up, or dealing with a house that is unique for the neighborhood. So anytime you're pushing what's normal, you're taking on greater risk. And again, sometimes it works, especially for people that have been through it, but you're going to learn a lot through that. And price to sell. Don't shoot for the stars. Your best opportunity to list is at the beginning, is when your property first comes on the market. It's going to have the most eyes on it. It's going to have the most likelihood of selling. And in a market like Calgary's right now, that is fairly flat to down, you only get one chance to come out. And if you come out way too high, you risk the property sitting on the market for a long time. And then eventually potential buyers see it as a stigma. If you look at a property and it's been on the market for 60 plus days, it's only natural to go into the psyche of, oh, this buyer is getting desperate. We're going to lowball their way out to lunch. So your best opportunity to sell is at the beginning. And we hate to see our sellers pushing the market only to have it sit longer and increase the likelihood of buyers seeing an opportunity to lowball. So we love it when our flippers, and again, you see it more with the seasoned veteran flippers, where they come in and say, here's my comps. I know exactly what I'm competing with. I'm going to come in, $5,000 less than my best comparable. And that's going to give them the best chance to sell and quickly. And you may run into an opportunity where you're bidding it up over list price because you're coming in so savvy. If you're coming in higher than market, you're not going to get into a bidding war. If anything, you're going to get into an instance where you're negotiating downward substantially. We talked about the importance to buy and research. I'll hit on a little bit of valuation techniques. So some of the most important aspects of a property to consider when comparing yours to another: date of sale. So how recently did it sell? Again, the more recent, the better. Lot size. Is it of similar lot size? Is it a much bigger lot, a much smaller lot? If it's a bigger lot, if your subject is a bigger lot, you're going to want to average to adjust up. Currently, we adjust up $10,000 for every 100 square meters in Calgary, and you'll do the same for downwards adjustments. So it doesn't have a huge significance on end value. Sometimes guys will come in and think, oh, it's 20% bigger, the lot, therefore it must be worth 20% more. No, that's not the case in most neighborhoods, unless you're looking at subdividing a property. But we're not here today to talk about land development or subdivision construction. Design and style. Again, if it's a bungalow, you want a bungalow. If it's a two-story, you want a two-story. You want to avoid trying to compare apples to oranges. Age and condition. When you're envisioning what your flip looks like, you're going to want to compare it to what similar properties have sold for. You're not going to want to compare a renovated property to a non-renovated property. You're not going to want to compare a property that was renovated 10 years ago to a newly renovated property. Building size is key. If it's 1,000 square foot bungalow, you want to be looking for comps between, ideally 10% of that, so 900 to 1,100 square feet, um, and adjusting from there. We're currently adjusting 10,000 for every 100 square feet, up or down, depending on what neighborhood, but on average it's 10,000 a square every 100 square feet in Calgary. Room count, if you're buying in a family neighborhood, you want at least 3 bedrooms up, to accommodate a family of 2 children. You're going to run into problems if you're buying a bungalow in a family neighborhood where there's only 1 bedroom up and 2 down, because what do you do with the little kids, with toddlers or with babies, until they hit an age where they would reside downstairs? You're just limiting the market, because most people in those areas want a certain room count. Basement, is it finished? Is it not finished? If it's finished, what type of finishing? We're seeing more and more flippers look at doing suited properties. We see a lot of value there. We see a lot of success there, especially for people on a budget who are buying to reside in the up and renting the bottom. Parking, what kind of parking does it have? Is it again a family community where most people are looking for a 2-car garage, and all you have is a carport, or vice versa? You want to be, again, you want to be pretty vanilla. So focus on what you're looking at, and identifying any outliers of your property. And then of course, upgrades in yard development. Are you putting hardwood in granite, or carpet and a wood type countertop, or what type of kitchen are you putting in? Is it way beyond what the market demands? Is it way below what the market demands? And then
Jesse, sorry, I'm just going to interrupt. We have a question that came in. If you could mention the takeout on grow-ups, in particular, if you could talk about the takeout on grow-ups for buyers that are trying to get financing.
So who's available for takeout?
I believe that's the question. Yeah. If you could just talk about, yeah.
Again, limited. I'm not the expert in this. You'd want to talk to a mortgage broker. They'll know exactly who's doing what. But when I last sold a grow up, one of the key players was Manulife Financial. They had a program that catered to grow ups. Most other large, big banks were not looking into it. It also may limit your availability to get insured mortgage financing. So where you're putting 5% down with CMHC or Genworth. So really limiting your amount of lenders who will do it. I'm not sure who's currently active and what the options are, but something certainly that you're going to need to dig into. And as part of your team, you should have an awesome mortgage broker who understands what takeout financing looks like on a grow up, because you definitely do limit your options there. I'm going a little bit too slow considering time, so I'm going to start trying to speed things up a bit. Again, making money on the buy. Some quick tips on that are working with wholesalers. Working with people who are professionals at identifying those buys and figuring out how to do the things that I'm about to talk about. They're providing cash offers. So they're not putting conditions on for timing. They are buying quickly. So they're going in, meeting with the potential seller. Usually it's off market. I'm talking here. Sometimes you can find great deals on the MLS, but I know a lot of the wholesalers are really great at buying off market and doing these 5 things I'm talking about here. Closing quick. It doesn't necessarily have to be quick, but more on the terms of the seller. not on the terms of the buyer. So, they're going in, interviewing the seller on what works for them. Does it help if we close in a week, or does it help if we close in 3 months? And with that, you're going to be able to find a discount in price because you're accommodating the seller, solving someone's pain. They may be in financial stress where they need to sell quickly. They may be, it may be in a state and they don't want to list with a realtor and have the hassle of it. It may be somebody who has gotten relocated or lost their job and find a job in another city, and they want an easy process. They don't want to list through a realtor. They see value in selling direct. Again, there are a lot of opportunities on MLS. So finding the right realtor, finding someone that you can work with, being clear on what your expectations are, setting those expectations, and having them execute on that. By expectations, I mean, identifying what you're willing to pay, how much profit margin you want to see, size of house, location of house, giving your partners as much information as possible to see them succeed is important, and always be searching for deals. So whether it's being on MLS, whether it's blanketing property or blanketing neighborhoods with buy your house for cash, whether it's being on Google as an option for quick closes and buying house for cash and solving people's pain. It's just always searching for the good deals. The professional flippers, that's what they're focused on. That's what the bulk of their time is finding the deals. And again, that's why it's awesome to work with a wholesaler, because that's their bread and butter. That's what they excel at, and they'll be able to pass on their expertise and value to you in the form of potential properties. Sourcing deals, make a plan and stick to it. Again, we talked about size, location, profitability. Really be clear on your plan. Be ready. Because when an opportunity does come up, you need to be there right away. You need to act quick. You need to have your financing in order. You need to have your budget in order, because sometimes these people will want to sell very quickly. So you need to be ready. Have all your ducks in a row, which will enable you to act fast and quick close if it calls for it. We talked about a team in place: your mortgage broker, your wholesaler, your tradespeople, your realtors. You want to have that team set up and really executing like a fine old machine. Checking titles is a nice thing to do. It's very simple. In Alberta, there's a spin registry, costs $10 to pull title, and sometimes that title can tell you a lot. Is the borrower in foreclosure? Is the seller who you're dealing with actually the seller, or is there other people on title that you're dealing with? Because we'd hate to see you do a bunch of work only to realize that really you've been negotiating with someone who's not entitled to sell the property. Foreclosures, there you can look at the Court of Queen's Bench search to review who's in foreclosure. You could be at a lot of flippers or at the courthouse, looking to work with people that are in distress to help solve their problems. Expired listings are an excellent source. Paying attention to listings. When they expire, you can go direct to borrower, or direct to seller, I should say. Properties just with a poor exterior, going around to neighborhoods and looking at properties where the pride of ownership isn't there. That may be a sign that either the home is being occupied by a renter or somebody who may not be interested in residing in that property any longer. Quick renos. I'm not going to spend too much time on this. We talked about the importance of renovating quickly. Look at timeline, look at scope. Our most successful flippers are really shrinking their scope. They're looking at minor renovations, lipstick stuff. So painting, flooring, some kitchen updates, some bathroom updates. Nothing, trying to stay away from mechanical, trying to stay away from especially stuff that requires engineering. So, keeping budget to 60 grand and under is important. That'll reduce your variabilities, and that'll increase your ability to renovate quickly.
Jesse, can I jump in there for one sec?
Yeah, for sure, Ryan.
So, we found that when we can keep the reno budget small, we price in our biggest buyer pool, because the more you put into the reno, the more you need out, the higher your list price needs to be, or the higher your end price needs to be. So our motto that we have when we are doing a flip is just to keep the property mortgageable. Because you might have your end buyer come in and want to change out the kitchen or floors that you put in there anyway, where you might have paid $1 or $2 a square foot and they want to put in $5 a square foot. So a lot of the time when we get a good deal on a property and we just want to do a quick flip, we just want to make sure that it passes by that bank appraiser for the bank to sign off and give them a mortgage on it, or in this case for when they are looking at the retail buyer buying it. So it doesn't have to be completely lights out, everything done, super finished. Not only that, but you're going to have your biggest pool of buyers at that lower price point.
Awesome comment. So basically the lesson there, Ryan, is make it mortgageable, but don't go overboard.
I think sometimes you just end up chasing bad money and you end up putting more in. And for me, we're always looking at our return on time and our cash on cash rather than our ROI. And a lot of times that just means not doing huge renovations. Let the retail buyer carry it. Because the other thing is, if you have, let's say, 30 buyers at a pool of $100,000 property and you have 10 buyers at 200,000, it's more likely that 20 buyers at 100,000 are going to bid that up to 120, whereas your 10 at 2 might only get it up to 210. So you might get more on your leverage just by having more people at that price point.
Yeah. No, awesome feedback. Shoot for a short period of time. Again, we like to see our flippers be in and out on the renovation side in 3 months. Ideally, we're talking 45 days. Keep the rental small, as Ryan had said. The smaller, the less variables, the shorter the time, the less potential pain. And look for large discounts as it relates to prices, of course, but also materials. Some of our more established flippers who are doing big volume are just doing cookie cutter renos. They're doing you can tell who's flipping the house just by looking at the listing, because they're using the same linoleum, they're using the same tile, they're using the same granite, they're doing the same kitchens. They just have a machine that are continuing to rifle through this, and they're updating from time to time. But because of that, they're buying stuff at discounts. They're sitting on storage lockers full of what they need, or even for the bigger guys, maybe some warehouse space. But discounts, whether it's on the price or the material, or realtors are going to hate to hear this, but also on the realtor side, if you're doing volume, you deserve a discount. So trying to find money wherever possible in order to make you more successful. I'm gonna pass it off to Garrett. Sorry for going a bit over, guys, but go ahead, Garrett.
Yeah, I better take over so we don't have to spend all day here. But and plus, everyone, I see a lot of familiar faces from yesterday's webinar, so you probably don't want to look at my face for too long. So we'll rip through my portion. So I think Jesse just mentioned pretty much everything here, but here's some good ideas of what you can consider for flips, and sometimes are the most valuable. As he said, no mechanical upgrades if you can, like those get really expensive. I actually noticed in the comment box that someone mentioned tiles, how appraisers and certain buyers won't even notice the difference between tiles. It's just because tiles are in there. So those are always good upgrades. Kitchens, really important, bathrooms, and then going on trend. Make sure you're sticking on trend within neighborhoods. See what's selling within your neighborhood. We know that trends change all the time, and you got to look for those properties that are selling really quickly. So just stick to what everyone else is doing and you should do really well. Flipping for rental portfolio. So you don't always have to consider doing a flip to sell. People want to buy discounted properties and renovate them in order to get value out of them, so you can keep them and get a new mortgage. That's why we suggest you deal with a mortgage broker. because your mortgage broker will be able to set you up with the best rates to keep those properties in a rental pool. If you want to do renos to be able to suite properties, that can always be good rental income. So make sure you keep that in mind. And it's something that we consider financing at Calvert. Ensuring quality mortgage broker, like I said, look for large discounts. Let's go to the next one, Mel. So Jess, you mentioned this as well. Just looking for communities with lower inventory. We think that's really important, especially as inventory might increase in the near future. It's important to find those flips in neighborhoods that have low inventory so that you can sell them quickly. It just means there's more buyers out there looking for properties in that neighborhood, and you would have a better chance of selling your property in those areas of the city. So there's going to be quicker turnover, and it's something that we can help you with at Calvert. We have an appraiser on staff. So every time we do a valuation, we make sure to keep into account what the inventory is. So yeah, let's get into our flip mortgage product. So flip or rehab. So good deals sell fast. So as Jesse said, we want to make sure that you are set up for success. So make sure you have a team in place so you can act really quickly. I want to go over just a really quick idea of how quickly we can act. On Tuesday, I met with a prospective flipper. I think it was at 10 a.m. in the morning. And we talked about how we get him qualified, what kind of properties he's looking at, that sort of thing. I said, if you provide me with an app, credit, your NOA, we can get you pre-approved for a property. He found a property that day, sent us his budget, the address he was looking at, as well as the renos he was going to do. And we had our appraiser do the value that day. The client went to the sellers and made them an offer. They put together the purchase contract. We sent them a commitment the next day, and it's supposed to close next week. So the process is super quick for us to be able to do that, and them to be able to act that quickly and state, hey, we can solve your pain, seller. We can purchase this property and get you out of this thing in a week, and we'll purchase it at this price and you're out. So you need to be able to act quick to get those good deals. Other lenders will only lend on the current value. We're lending on the after repaired value. And traditional financial institutions usually have payout penalties. So it's important to keep into account all the different costs of different lenders when you're dealing with them. So this is our underwriting philosophy. If it's a profitable deal, we want to be involved. And how we do that is by, like I said, we get your reno details and your budget, and we do a value internally on the after repaired value. And we put it into our flip analyzer, which I'll provide to you a couple slides after this, to determine whether or not we think you're going to be profitable after all costs. So yeah, we want to make sure you're making money. We value the property, minimum 10 grand down. So if you're purchasing a property for $400,000, we can potentially provide you with a mortgage of $390,000. And then you would be required to put that down payment of 10 grand plus the rental costs and the carrying costs. And we're going to provide you with our expertise along the way. It's really important to have a second set of eyes on these properties. You want to make sure that you're set up for success and building that team. And yeah, we really are in it for our clients. We want to see people be successful. So this was from a little while ago. It's changed a bit. Our loan to value for the after repaired value that we're considering is 70 right now, just due to COVID. We're considering a little higher in Ontario, but for now, if we're talking about Alberta, we're doing 70% of the after repaired value. Minimum is still 10 grand down, as I said, and we want to make sure that you have the capital to be able to do it. So that's your down payment, your renos, and your carrying costs. For the 10 grand down, the interest rate is 15.5%. Now, that sounds like a lot, but you got to consider that flips are really quick. You shouldn't be spending a whole year doing a flip, and 15.5% is on an annual basis. You can buy that rate down as well by putting more money down. So if you're putting more than the 10 grand down, we can do a lower interest rate. And then the fee is anywhere between 1.5 and 3%. It's on a deal by deal basis. So like I said, lowest down payment is 10 grand. You could put more down and then the interest rate will be reduced. Lots of flippers tell us that they enjoy just doing it with the 10 grand down. It limits their risk, as well as allows them the opportunity to buy other properties that might be coming on the market that might be a really good deal. So you can keep cash in your pocket. But we support you in any way that you want to do your flips. If you want to put more money down or you just want to put the 10 grand down, we're happy to work with you, meet with you in person and figure out the best plan for you. So we'll get into just a couple case studies here, showing what we've done in the past with certain clients. So here's an example of a 10 grand down flip. Client purchased the property for 267, put 10 grand down. We provided a mortgage of 257,000 plus the commitment fee. So we're going to a very high loan to value based on purchase price. And that's why the interest rate is so high. But that interest rate is under 1.3% per month. So if you put it in those terms, the cost is not that much if you're not spending a whole year doing this flip. So this client was able to make a net profit of $32,000 in just over 5 months. That's after everything. So that's after your realtor costs. That's after your utility costs, your carrying costs, your fees. We're taking everything into account to come up with that number of net profit. Go to the next one here. So another example where we're doing the 10 grand down. Clients purchased 313,000. We provided the mortgage of 303,000. They did a really quick renovation on this one. I believe it took them a month and a half to do this renovation. And then they sold within a month and a half as well. So net profit of over $40,000 in just over 3 months. And again, that's net. So that's after all your costs. That's in your pocket. So pretty impressive job. And as you can see, they did a really good job of the kitchen, opening that up. They took out a wall there on the side to really make it just visibly pleasing to buyers. So Jesse's kind of gone over all this, but important of knowing your numbers. You want to make sure you know all your costs when it comes to a flip. Make sure that you use our flip analyzer, which we'll provide you after this presentation. And all the costs that you should consider are in this flip analyzer. So we'll go to the next slide and we'll kind of go over what I'm talking about. So it really is just it's a glorified spreadsheet, but it has everything you need to take into account. So your purchasing costs, selling costs, operating costs, renovation budget. So we go over this with you. You're feel free to fill this out yourself, or we can do it for you. And we kind of go over how long you think it'll take you to renovate, how long you think it'll take to sell. It's always good to budget for more and shoot for less. Just be more conservative when considering timelines. And then you have your after repaired value, purchase price, down payment. So we have everything on here to make sure that you're successful. And you'll see on the next slide here, this is the second portion of our spreadsheet. And it goes over all the calculations after taking those costs into account, as well as what you sold it for or what we think you'll sell it for. So you'll see that there was a profit. This was actually one of the previous case studies that I had above. And the profit was over $40,000.
I have to go.
The really interesting numbers on here is the return on cash invested and the return on cash invested annualized. Pretty amazing to see 46% return on cash invested. And this is something you can play with, and going forward, you can use this to go over your flips. Yeah, so that's it for our portion. I tried to speed it up a bit, as I know a lot of you saw our presentation yesterday, but we're really excited to pass it over to Bow River Properties and DCI to go over their portion about what they do.
Awesome. Yeah, once again, I'm Jason from DCI Properties. I got Ryan here now. Ryan, you're muted. There you go. Ryan is the owner of DCI Properties. So Garrett, did you want to switch over? I mean, I could just tell you next slide and we could click through there. It's
actually, it's not me, it's Mel on, but I just said I would quickly pause.
Give us, a little bit of intro. But yeah, so we're wholesalers here in Ontario, and my wife and I started the company in 2016. We started buying a few houses here and there, and we just realized that we were getting a lot better deals just kind of sourcing them ourselves than going through agents. So from there, we've just kind of been chipping away and expanding. And yeah, we're now a team of 13. I'm actually sitting in our new office, which we're about to move into next week, which is pretty exciting. But pretty simple. We buy houses, single family houses, condos, multifamily, commercial, land, rental properties. There's pretty well nothing that we're going to turn away if the numbers make sense. They are all private sales. I think we may have bought one out of the 113 now. We had 2 contracts coming yesterday. I think there might be one that was an MLS purchase. Otherwise, it's all been private with us dealing directly with the home seller. And our properties don't reach the MLS. We're looking to give value to our buyers who are looking for rental properties, who are looking for flips. Yeah, we buy houses as is, where is, and yeah, we've purchased about, again, 113 since the start of 2019 when we really started to expand. So the one thing I do want to touch on, and I did mention a couple of times during the presentation on flip. So before we really started wholesaling and building out our buyers list and just assigning most of the deals that came through, we were flipping a lot. And what I realized, and it's a very simple concept, which I'm sure most people can relate with, is know what you know and know what you don't. And I think we realized that we really aren't a construction company. We're not a company that has very good relationships with contractors, and all fairness. And we didn't manage flips probably as best we could. So if that's your strength and you have good material you can source, you have good reliable guys you can count on, you can get things done quickly, and that's your skill set and that's what you're good at, stick to that and we'll find you deals. Because I will tell you, we do invest a lot of time and money in how we go about actually getting deals. So I always encourage people, if you can, sure, go out, try and find your own. But I also realize that there is a scalability to sticking with what you know and knowing what you don't.
Cool. So I just wanted to go over just a wholesaling overview of what wholesaling is. A lot of you on here might already know what it is, but we thought we'd at least start with a definition. So a real estate wholesaler is someone who finds deals and connects investors with those deals by charging a fee for doing so. So what we do is we have different marketing sources that reach home sellers, and it's up to us to find those great deals from motivated sellers, and they're motivated for a number of reasons. And again, that's our job to find the reason why they want to sell. We will then go and negotiate a fair price that makes financial sense for both parties. If you do look up DCI properties on Google, you will see, I think we're close to 50 Google reviews now, and we're just right around a 5-star, and those are all direct from a lot of the sellers that we work with who are very satisfied with our services and how easy we've made it, but also are content with the fair price we've given them. We then sign that purchase contract with the seller, just like anything on an MLS. We use a similar RPC contract that most agents in Alberta use, and similar again for what we do here in Ontario. We'll then find a cash buyer for that property. We do like cash buyers and working with companies like Calvert, of course, who can make the closing as easy as possible and where we have control of that closing. A lot of A lenders, banks, Scotia, TD, they're the ones that with their closings have a lot of control. And if the property doesn't close, it looks bad on us. So guys like Calvert, who we've used already, and just cash buyers from other private lenders are definitely what is going to stand out for an investor when trying to purchase off of a company like us or other wholesalers in the industry. And then we'll repeat that process over and over again. So as you saw in our last slide, since the beginning of 2019, we've purchased about 113 houses now, and we don't see why we can't double that out in the Calgary market. Cool. So our strengths, guys, we're excellent at sourcing leads and filtering those that make sense for us. Every lead that comes in, we do analyze very closely, and it's one of the more time-consuming parts of our process. We have a number of people on our team that are simply there to analyze deals and make sure that they make sense, not only for us, but you guys as well as the investor, because at the end of the day, we want you guys to make the most money in this process so that you come back to us as repeat investors. That's ultimately our goal. We have reps both in Ontario and Calgary that are our feet on the ground, and it's their job to negotiate the best deals with these sellers. We have gone through numerous meetings with real estate lawyers in terms of the right conditions and terms to put in place that reflect our business and are also enticing to sellers. So we use solid purchase contracts, and everything goes through our lawyer and the seller's lawyer, as well as your lawyer. And we have other colleagues in place for back-end support who deal strictly with the transactions of all the real estate deals that we do. It's very rare that it is on our side that a deal may not close on time, because we are very particular in our paperwork, and it's something we pride ourselves on. And speed and volume is the name of game for us. So by the time we put a property under contract, within 5 to 10 days, we do look to have that under contract with an investor. So those are some of our strengths. I think I just lost Ryan. Oh, he's still here. Very timely. He was going to go over this one. But I can keep going here. So in 2020, we've had the intentions of expanding to Calgary. We have hired our home house buying specialist, who is under training right now and is local in Calgary, lives right in Calgary, and is our boots on the ground. So we expect to really just focus strictly on the Calgary market and maybe some of the smaller surrounding areas. It's something that we will work closely with Calvert on, and any feedback that you guys have, if you want to connect after on areas you're looking to purchase, we're all ears. We hone in on areas in Ontario that work best for our investors, and we want to make it as smooth of a process as possible. So there's no sense in us marketing in areas that investors and flippers aren't interested in.
Yeah, and that's a good point by Jay. We do get a lot of feedback, kind of going back and forth with the buyers working with. If you go out to one of our properties and you don't like it for whatever reason, or the numbers don't make sense, let us know. It's good feedback for us to have, and we'll try and work with you to get you something that does work. But like Jay's saying, if there's a specific area or a specific type of property you're looking for, let us know so it's on the radar and we can just pick it up a little bit quicker when it potentially does come through.
Mm-hmm. Yeah.
Go to the next one. Oh, and I guess that last.
Sorry, Mel. There we go.
Sorry, that last point is probably important. So we're not cherry picking properties for ourselves to flip, which I know a lot of wholesalers will do. We have no real intention of wanting to do many flips in Calgary. It's not a market that we're super strong on. We just don't have the connections when it comes to contractors and the boots on the ground to be able to run those projects. So again, that kind of goes back to my comment before, know what you know and know what you don't. We haven't been super successful even in our own backyard on flips. We're not about to try and start doing that out there. So most stuff you're going to see from us is going to be, straight from the source and not kind of being cherry picked by us before it gets to you.
Mm-hmm. Yeah. So what we found being the easiest and smoothest process with our investor pool is basically putting together an investor package that we send out using MailChimp, which is an online platform that allows us to put together just a very smooth and attractive package for investors. And these packages, we'll have an example here in a second. But the goal with these packages is to be as transparent as possible. When we're at these houses, we are finding out everything we possibly can about them. And we want you guys to know that. Our goal is to not have surprises on your end. Of course, when you start opening up walls, as we all know as flippers, that's where you can find surprises. And that's just kind of the name of the game. But for everything that we can see and that we can disclose with the seller, we will be as transparent as possible, because we don't want to waste your time. You're eventually going to come out to see this house, and if we don't put that in these notes, you're going to see it anyways, and you're going to be like, I'm no longer interested. So we're transparent there. We'll put together about 50 to 75 photos of the property. So you should have a pretty good lay of the land before going in. This is, interior and exterior photos. And we'll also outline these interior and exterior property features with dates of some of the larger capital improvements that we can get from the homeowner. So things like, the roof. When was the roof done? 2012. Windows 2015. If they have any idea on the electrical and plumbing, when was that done? And then of course we will give suggested renovations. A lot of it might be like cosmetic stuff, or if you do need to replace the furnace, we'll definitely let you know that, and you should be able to tell from the photos. And then we will provide comparable properties. We generally like to make them as close to the property build as possible. And we'll do, comparables of the as-is value. We're always trying to, of course, get below the as-is value of what has sold recently on the MLS, and also the ARV of what we think this property could be worth based on something that might have been, flipped recently around the corner.
Yeah, and just to kind of touch on that, we can kind of go to the next slide, but when it comes to comparables and the as-is, we realize that there obviously is going to be different ARVs that people have on what they are going to do with that property. So sometimes it's harder for us to really equate that for you, because if you're doing some of your own work, your cost might be a little bit lower than it would for someone else that's hiring it out. You may be able to push it a little bit more if you're doing a higher end reno versus one that's just more cosmetic or lipstick. But when it comes to the as-is value, that's really what we're trying to determine. How much lower are we on the as-is value, and is there enough room there for you?
Correct. And that goes also back to what Calvert's saying about making money on the buy. We want you guys to make money on the buy. That is our job. So we look very closely as what is this as-is value, and we focus in on, trying to provide one of the least expensive houses in that area when we are putting these things under contract. So this is just an example of a recent house we had in southwestern Ontario. It was just a small single family house. You can see there what our wholesale price is. So that was, that includes our fee. So I did see one question just regarding how the wholesaling works. And in a nutshell, we will put the property under contract for a certain price, and then we will put it out to you guys for a certain price. And that, you know, that distance in between is the money that we make. Every price that we put out there will already have our fee built in. And so for this one, 135,000 or best offer, you don't have to, you know, give us the amount we're asking. I always tell our investors, you come out, take a look at it. You make a decision on what you're comfortable with after running your numbers and what your threshold is on your ARV, how much money you want to make. And obviously that goes hand in hand with how much your renovation is going to cost. And then we'll have a closing date here. This one was unique just with the flexible closing, but generally there will just be one date there. And that's, you know, we work on sellers' terms. It's one of our marketing ploys. If a seller wants to move their closing because, you know, they're moving into a rental and can't get somewhere until a certain date and they have to move closing, that's something you guys need to recognize with us. It is on sellers' terms, and it's one reason why they don't go on MLS, because people like to sell with us on their own terms. We will provide a map of the area so you'll know exactly where. And then below this, which isn't shown, is just a description of, we will give a little write-up of the area. You guys will have a pretty good understanding of the areas that you're looking to invest in. We'll give a bit of just a background on the house in another little, you know, 4-sentence blurb. And there will then be a line that says, contact us for the property address. For the privacy of the seller, we don't give the property address unless you contact us. There will then be, we will then also provide on that phone call like a walkthrough time. And if you're seriously interested, we'll get you on that walkthrough. And then there will be a link below that with the property photos, which you can see here. You click on that, it'll take you to a Dropbox link, which will open up to about 75 photos of the house. They give you a good lay of the land. And then, as you can see here, we'll give you the interior property features, which are pretty templated, but obviously that's just for the order, but we'll then customize it to what the features of each house are. The feedback that we have on our marketing for this from our investors is it's some of the best they've seen in comparison to a lot of other wholesalers. It seemed to be a little bit more unorganized. People really like the way we put this together. It's easy. You can scroll through it on your phone. It looks great. And it's very informative.
Can I touch on that, Jay? Not only is it good for the person who is looking at buying at the actual flipper, but it is very good for their lenders or their partners or their money partner or their JV partner. And we do that on purpose. We want it to be easy for people to read and understand the deal. And that's why we lay it out that way. So you could look at one of these, flip it over to Jesse and be like, yeah, this looks good. We're good to go. And because it has everything laid out there, we're not holding anything back. We're including comps, and we do have our own access to be able to see pretty well everything that realtors can see and everything Jesse can see. So we're trying as best we can to get our comps as close to that property as possible, and really trying to give you guys a good idea of you know, what you can do with it, and what your as is and ARV values are.
Yeah, I was going to comment on your analysis package is awesome. The amount of information you distill into it, and the expertise that you guys have that you're able to pass into the package is really great. Like, I would even recommend, you know, I obviously recommend everybody getting signed up for DCI, but even if you're not doing a DCI property, borrowing some of their brilliance in terms of how they look at a deal and how they package it, because as a lender, it makes our job really easy. And they're giving a lot of great information in a very quick snapshot. So it's an awesome piece, and I could see it having tons of value for everybody in the transaction.
Yeah.
Yeah, and we'll have the suggested renovations there. I mean, everybody's different, but it is yeah, just we think, you know, you should consider doing these suggested renos. we have a lot of people that go into our houses, clean them up and relist them, which is technically called a wholesale. So there's that option. Instead of just, doing a reno, they're getting the property at a good price where they can, be in and out very quickly, that they just listed on the MLS, and we're okay with that. So
and in that blurb, sorry, Jay, that's missing just below that, we will include too, if it seems like something that might be good for a secondary suite, or maybe it's 3 units and it's better used for a rental, or, it's a cheap single family house and, we think the rents in this area could attract an A-class tenant, we will kind of let you know that in that little blurb there too, on just what we think the best uses for the property are. And again, by doing this every day, having pretty good handle on who our buyers are, we're not usually that far off from where we think that property is going to go.
Yeah. And Mel just wrote in the comments that there's that link that's there is over there. The link got pretty long, but the link is there if you guys want to check out a different property that we have, just made another
next
marketing.
slide.
Yeah. So I work a lot with our investors here in Ontario, and we've, experimented with different ways and listened to a lot of feedback on what's the best way for people to submit offers to us on an off-market deal. There's a lot of wholesalers out there that do, first come, first serve on their deals. For us, we're not huge on rewarding the person that, is sitting on their laptop and is like, yep, that looks good, I'll take it. We've done that before, and the feedback was like, I've been working all day, man. I just saw your offer. Why would you even, send it out if you're going to keep rewarding the guy that is just sitting on his laptop and happens to get this email before anyone else? And we also don't do bidding wars. So how we do it is, you guys would reach out if you saw an email that you liked, a property that you liked, and we'll provide the property address, the walkthrough time, and the offer date. And then once the walkthrough happens, we'll give the investors time to run their numbers. If we do a morning walkthrough, it may be like a 5 o'clock offer time, or if it's an afternoon one, maybe the next day at noon, just to allow you some time to really crunch your numbers. Excuse me. And then we will then at that date, we just ask you to submit a number that you're comfortable with. Everybody wants to make a certain amount on their property. Everybody has different rental budgets. Based on that threshold, you'll have a number that you want to submit on. And we ask for your number and how you plan to finance it. So, and that's it. We don't go back and forth with, Bob and Joe, just say, hey, Bob's over here, Joe's over here, and create a bidding war like MLS. We don't believe in that. And a lot of our investors respect that. Again, they're like, I'm comfortable at this, and this is the amount of money I think I can make, so I'm going to submit on this number.
I just want to jump in there.
Make a choice.
Jason, sorry, I want to jump in there for 1 sec. I'll say as a business owner, sometimes it is tempting when Jason gets a call and someone's like, hey, where's that other person at? Can you tell me? And I'll like come up a little bit. And every single time Jason's like, man, that wouldn't be fair to everybody else. If I constantly told, the guy who called last where everyone else was at to let him know to bid it up, it just wouldn't be fair all around. And even though that means we're potentially leaving money on the table, we want to do what we feel is sort of the best way to go about it. So we have an offer date, you submit your offer, and go from there and run your numbers. And sometimes you're going to win it and sometimes you're not, but we're not going to pin people up against one another. And we're also just don't feel comfortable rewarding the first person sitting at their computer or on their phone that happens to see it. So we know it's not perfect, but we feel it's kind of the best of both worlds.
Yeah. And I'm big on just protecting people's offers. So, you submit something, I'm not looking to shop it. And that's the truth. So, we want to give people a fair opportunity to submit. And, this is a process that we've found is working great with our investors here in Ontario. Cool.
That's it.
Right on time.
Right on time. So thanks everyone in the audience for taking time out of your busy days and joining us. I know Calvert, Bull River would love to do business with you when and where possible. you know, a lot of people on here are currently Calvert clients, and we recommend signing up with Bow River and giving them an opportunity. You're going to see deals. Worst case scenario, you pass on deals, but like I said, they got a lot of amazing expertise. And some really smart stuff goes into their packaging, and again, another worst case, you can borrow some of their brilliance, but I know that they provide an awesome service, and I know that flippers are going to see value in that service.
Yeah, there's no harm in signing up.
I just put a link too in the chat for our buyers list link, and yeah, we'd love to see you guys join it. And again, my email's there. If you want to shoot some questions, I'm happy to also hop on a call with anybody out there with questions and start to build a relationship, because we'd love to, you know, source you guys some deals here moving forward.
Did anyone else have any questions to ask? Nope.
Everybody's done with us.
Yeah.
Yeah. I saw you guys operate in Windsor. We do operate in Windsor, and yeah, I mean, the example we had there was a Windsor.
One thing I just wanted to kind of quickly touch on Calvert's product, which I think people sometimes lose sight of. When we first met with them and they were explaining their process, and Jesse was like, yeah, we do this product at 10K down. I was like, what? And I think what people, even though they're at 15%, it might be higher than what you might be used to paying. I think a lot of people, when they are in the game, lose sight of the cash on cash return versus your net ROI on a deal. And as someone who has done, you know, and managed like 10, 15 flips at one time, keeping as much cash as you can in your pocket to pay for expenses, pay for rentals, to pay for unexpected costs is worth paying that extra percentage. So if you are buying from us or buying from other wholesalers or just buying good deals in general, I would strongly suggest using Calvert to help leverage that. They get it. I mean, they're on a webinar to explain their process. I don't really know too many other lenders that you know, are specifically looking to help their flippers and help their investor buyers buy properties and do more. So they know what they're doing. They know their numbers. And again, just factor in that cash on cash, which is the money that you're putting into the deal versus what you're getting back, and not necessarily just on that final ROI number, because it does help you leverage and scale to be able to take on like 2, 3 at a time without having that huge cash outlay into one project. And it's also a bit more of a risk mitigation on your point too, because on your side, you just don't have as much tied into one deal.
Yeah, I appreciate that, Ryan. And I should also mention that we'll be sending out an email to every participant after this, just with the recording, flip analyzer, and different information that we discussed today.
Thanks so much, guys. This has been super valuable.
Ryan, if you guys want to package anything up with that email, we can do it combined rather than in these guys.
Sure.
Great.
Sounds
Thanks,
good.
everyone.
Have a great day.
Thanks all.
Thanks, guys.
Thanks, guys.